All right, welcome everyone. As you can see, I'm not Andrew Stotts, but I'm Alex, who is a co-founder of the Valuation Masterclass. And we're gonna bring in Andrew here, and he can tell you what he's up to and why he's not running the stream.
Yes, unfortunately, I got my day taken away by a Thai government trying to get my driver's license. So it lasted longer than I thought. But I'm really looking forward to these, Alex. Last night was pretty amazing. And I know we got Rachel coming up and she's looking like she's ready to go. So let's do it.
Alrighty, enjoy your car ride, and I'll bring in
I'll be
Rachel here
listening.
now instead. All right, Rachel, welcome. How do you feel? So I think we have some issue with your microphone now, because we can't hear you. Can you check so you're not muted?
Oh, I can hear you clearly. Can you hear me?
Now we can hear you. Perfect.
Okay,
Alrighty.
good.
So basically what we're going to do now is I'm going to get your presentation up on the screen here, and then I will turn off my camera, so it will just be you and your presentation, and you're really excited
Okay.
to share with us. What is up to and why is not running the stream. Alrighty.
Yes, unfortunately, my day taken away by a Thai government trying to get
It seems like you have maybe something else on in your background, Rachel. So just make sure to mute that so we don't get any noise from it.
Okay.
And also you see that at the bottom of your screen you have a bar that says you can click on hide.
Can you repeat that again? Sorry.
At the bottom of your screen you can see a bar that says Studio Restream is sharing your screen, and you can click on hide.
Okay. I can't even get what it's trying to say. Can you see my screen perfectly now?
Yeah. So we can
Okay.
see that. You can. Now I will turn off my screen, and it's just for you to start going. So let's rock.
Okay. Okay. Can I go on now?
Yes, go on.
Okay. Oh, hi everyone. You're welcome. My name is Rachel Ilori, and I'm here to present my valuation on costs. Costs, the potential growth ahead, but the market is overly optimistic. I have a recommendation which says sell with the current price of 846 and my target price being 575. So unveiling analysis on cost with a sell recommendation, I established a target price of 575 US dollars, reflecting a potential downside of 32% from the current price. This target price is derived using the DCF valuation, applying a weighted average cost of capital of 8.7% and a terminal growth rate of 3%. What is the highlight of my valuation today? Costco membership fee rise would lead the net margin improvement. Two, the upward competitive advantage as Costco introduced new Kinland signature items. Automations and robotics driving efficiency and growth. And what are the major risks that Costco might eventually face, which is market saturation and growth stability risk, decline in membership renewal rates, low cost threatened by inflation and risk of competitive pressures. I have my background here of Costco. Costco Wholesale Corporation, founded in 1982 in Seattle, initially operated as Price Club before merging with Costco in 1993. The company, known for its membership based warehouse model, generates revenue primarily through merchandise sales, with membership deals contributing around 1% of the total revenue, but significantly impacting operating income. For the fiscal year 2023, Costco reported a total revenue of approximately 274 billion US dollars. And Costco future projects focus on leveraging technology to drive efficiency and sustainability. So let us move on to some stories about Costco. I tagged it the efficiency blueprint, innovation for a stronger future. Costco membership fee rise would lead the net margin improvement. Costco has consistently seen strong membership growth due to its value proposition and customer loyalty. Although membership contributes 1% to its total revenue, despite this moderate contribution, these fees are crucial to Costco overall health as it contributes considerable percentage to the net profit. After 7 years of maintaining its membership fee, Costco announces an increase in membership due of Gold, Business, and Business add-on affiliates from $60 to $65 and Executive for $120 to $130. Over the years, there has been a consistent growth of 4% in the membership renewal. And I assume that while there might be growth in the renewal rate of membership, there could still be an increase of 10% in the revenue in the future years. Also, the net margin is expected to grow to 3.7% in 2026 from 2.6% in 2023. That is amazing. So, secondly, uphold competitive advantage as Costco introduces new Killen signature item. What is this Killen signature item? Killen signature is a Costco private label brand that offers unique, high quality, and cost savings encompassing a wide range of products across various categories. The private label brand represents 30% of Costco 273 billion in revenue. In high inflation environments, consumers are opting for a private label to save money. With the introduction of more Killen signature, I assume it will boost its share of sales to 35%, adding approximately 12 billion US dollars incremental revenue over the next few years. The success of Killen signature not only retains its competitive edge, but also deepens customer loyalty, driving both sales and profitability. Automations and robotic driving efficiency and growth. Costco is transforming its operations with advanced automations and robotics, aiming to enhance warehouse efficiency and reduce costs. What is the key initiative for this? The key initiatives include deploying robotic system for sorting, picking, and packing, which will speed up order fulfillment and cut labor costs. So moving on to the industry, because we cannot talk about these customer staples Costco without talking about the industry. So navigating challenges amid persistent commodity pressures. One, the first story about this is steady growth industry in an unstable market. The retail value sales of staple foods steadily grew to above 1 trillion US dollars in 2023 at 3% compound annual growth rates, driven by high single-digit price increases from the global energy crisis, raw material shortages, and high labor and transportation costs. Despite these challenges, this industry showed steady growth, with companies adopting several strategies such as vertical integration, diversification, and investment in emerging markets to navigate a volatile environment. Traditional businesses led food sales while e-commerce boomed in personal care. Offline retail challenges continue to dominate staple food sales, despite a decline in challenge share from 98% in 2018 to 94% in 2023. Euromoto reported that discounters experienced a 5% GCAR in outlet growth from 2018 to 2023, and small local grocery strive by offering smaller pack size of food. So let's move on. The staple food inflation remains high amid geopolitical tension and trade restrictions. Staple food inflation remains elated despite declining global commodity and energy prices, primarily due to geopolitical tensions and trade restrictions. Russia withdrawal from the Black Sea corridor deal has significantly disrupted global grain supplies, leading to a further delay and inflationary pressures Additionally, the export ban from major staple food producers like Indian, Indonesian have tightened chain, creating scarcity. And as we can see in the graph here, everything that has been explained here can be shown in the graph here. So moving on, let us talk about the revenue and the gross profit on Costco. In the second quarter of 2024, Costco delivers robust performance with EPS surging 28%. So in 2024, Cost delivered a strong financial performance with revenue up to 9% year on year. And the company achieved a 13% year on year increase in the gross profit margin and significantly a 31% year on year increase in the EBIT margin. And Costco reports incurring EPS of $3.74, reflecting a 29% year on year increase and impressive 70% quarter on quarter growth. And as you can see, it is being tagged here. And there are some consensus estimates as regards Costco. Different analysts as recommend some things. And so what are they saying here? So currently, we have 37 analysts covering Costco. Among them, 11 issued a hold recommendation, while the rest are recommending to buy the stock. The average price targets represent a 5% upside potential. And Costco also predicts a decrease, the consensus also predicts a decrease in the revenue growth from about 7% in 2023 to about 5% in 2024. The revenue structure of Costco. The Costco revenue can actually be categorized into four segments. We have the food and sundries, we have the non-food, we have the warehouse, and we have the fresh foods. In 2023, the food and sundry segment, which include items like dry grocery, candy, frozen food, and the likes, contributed 40% to its total revenue, while the non-food segment comprises major appliances, furniture, contributed 25% to its total revenue, and fresh foods, which include meats, produce, and bakery, contributed about 15% to the total revenue. And other revenue streams, which include gasoline, pharmacy, optical services, and food costs, contribute 20%. But while membership fee contributes only 1% to the total revenue, and while it contributes 1% to the total revenue, it plays a crucial and a critical role in Costco profitability due to their high margin nature. So moving on, we have our FVMR investing here. We can see comparing Costco with other countries. Costco appears attractive relative to 1,830 non-financial companies in the US, considering the fundamentals, valuation, momentum, and risk. But while it performed excellently in the fundamental, momentum, and the what's it called? Fundamental and momentum, it performs weakly in the valuation and the risk, and weak in valuation as it's trade on high PB relative to other companies in the US, and also a very high PB. And the balance sheet risk is a bit high due to the low current ratio. And why the price risk measured in terms of beta in the US is higher than the companies in the benchmark. So moving on, we have our profitability growth here. We can see that the profitability growth dangled between 2 naira to 3 naira from 2020, 2 to 3 from 2020 to 2022, but fell to 5 in 2023. And the past 12 months show that it's maintained a 2 among 560 large consumer staples companies globally. And the profitability has ranked in the top 20 for the whole period. And the growth fell to 5 from 4 in 2023 and continued the downward trend since 2021. We can see that the revenue growth ranked 3 in the past 12 months, and the expenses direction ranked average in the past 12 months also. So looking at the profit and loss statements here, we can see that the revenue of Costco grew consistently from 2023 to 2028, while its net profit margin also grew from 2023 to 2028. Moving on, we can see the balance sheet also. And in the balance sheet, something that will actually struck us there is the net fixed assets. And we can see an increase in the net fixed asset. And this is due to the expansion program that Costco is actually embarking on. While they are expanding to have more warehouse, they are also investing majorly in their what's it called, in the technology area. And we can see the liability and equity that Costco is really doing well in their liability and equity. So moving on, the cash flow, we can look at the cash flow statement here. Majorly, we can see the non-balancing item grew from 1,656 to 3,254 in 2024. And this constant growth is due to the investment that Costco and the expansion that Costco is actually embarking on. So moving on to the ratios, the current ratio of Costco is consistent with what they have been having before. We can see in 2021 it was 1.0, in 2022 1.0, and this was maintained all through to 2026. So moving on, let us go to the relative valuation. On a forward 2024 estimate price to book basis, cost is trading at a premium relative to broader consumer staples industry in the US, and the valuation gap is even more pronounced when comparing Costco with its peer in Asia, excluding Japan, and the global market, indicating a significant valuation disparity. I project Costco return on equity to reach approximately 26% in 2024 estimates, and this figure surpasses the sector average in Asia ex Japan and align closely with the global average. Though it remains below the average ROE in US sector, and this data suggests that Costco appears expensive relative to the three markets when using PEB to ROE multiples. And moving on to the PE to growth, on a forward 2024 PE multiples, costs trade at a significant premium compared to the consumer staples sector across the US, Asian, and global, indicating it is overvalued on a PE basis. While I anticipate positive EPS growth driven by the successful expansion strategies in 2024, the projected increase in the PE ratio to 53.4% with 12.5% EPS growth reflect a strong market optimism, but also suggests potential overvaluation concerns. So moving on, let's talk about the valuation and the target price. I assume a risk-free rate of 3% and an equity risk premium of 7% for US markets. Given cost I beta profile, I used a beta of 1.0, slightly above the historical average, and forecast the capital structure of 17% debt to total capital. And this results in a WACC and discount rate of 8.7%. Utilizing a terminal growth rate of 3% and a DCF valuation approach, I estimate a base scenario sales growth of 10% until 2028 on 2028, valuing cost at $575 per share and a 32% downside to the current market price. In my sensitivity analysis on the next page, the optimistic scenario assumes a 17% growth margin until 2028 and yielding a target price of $672 per share, while the pessimistic scenario assumes a 13% growth margin resulting in a value of 478 per share, and which is being shown here. So the major risk that might affect Costco, market saturation and growth stability risk. Market saturation and growth stability risk. As Costco continues to expand its footprint globally, there is a concern that the company may eventually reach a point where it can no longer sustain its current growth trajectory. With over 800 warehouses, the potential for diminishing return on new locations is a real threat. And in a saturated market, Costco might struggle to maintain its growth rate, leading to a lower profitability. Decline in membership renewal rate. While Costco business model heavily relies on membership fee, any decline in membership renewal rate poses a significant risk to the company's revenue and growth. If economic conditions worsen or competitor offer more attractive membership deal, Costco may face difficulty in maintaining its high renewal rate, which has historically been around 90%. Low costs threatened by inflation. As a retailer known for its low prices, Costco may struggle to maintain its price competitiveness in an environment of increasing costs and the risk of competitive pressures. Costco faces intense competition from both the brick and mortar retail, while the Walmart and Target, as well as the online giants such as Amazon, these competitors are continuously innovating and expanding their offerings, which could put more pressure on Costco market share. So, general disclaimer, this report is for information purposes only. Thank you.
Right, what a great presentation. So I'm gonna take a little bit of questions here from the audience, and then I might have some questions for you as well. So the first one here is from Moman. He says that he sees that Kirkland brand represents about 30% of revenue. How could this affect your valuation if something went wrong or happened with this brand? What do you think about that?
Oh, okay. Thank you. Having made the research about Costco, one of the major things that they do is to offer their product at a very lesser price, low cost, and which they tag as their Kinland signature, and offering. And this thing, it represents 30% of the revenue. In a case of inflation, or whereby the consumers cannot buy more, because one of the reasons Costco is offering the skin and signature is to keep their consumers loyalty with them. But in a case of inflation where they cannot sustain this, I project that there might be a reduction in the revenue of Costco going forward. Thank you.
Um,
Right, I think Andrew has something he wants to ask here.
what?
Okay.
Why do you think that the market is so positive on the company, given its high valuation and the like? What is the market seeing that may be wrong?
Okay, what the market is saying that may be wrong is because at first Costco has always proven to be ahead of all their competitors. And one of the thing is because they offer most of their product at a very lesser price, and which buys the loyalty of the consumers. And the investors are always looking at it in this way that, okay, so far there are more people that are purchasing items with Costco, there will be an increase definitely in the revenue. So investors are always like optimistic about Costco, and looking at the expansion strategies and different innovations that Costco also is also bringing into tables. They are Investors are really, really optimistic that they will eventually continue to maintain this growth rate. But what could have happened? What I am seeing that the investors are actually doing wrong is because there will be a time that Costco might not be able to sustain this growth rate, that it will get to a peak, and that's one of the reasons that my recommendation is sell. So don't be over optimistic with the recurrent growth that Costco is having, because it might get to a point that they might not be able to sustain. Thank you.
Okay, how does it feel to graduate from the Valuation Masterclass Boot Camp?
Oh, it's so amazing. As you always is transformation and not transformation, and truly transformation.
Yeah, so tell us about what's different about you now compared to when you first came in.
Okay, now I can take up reports, annual reports of companies, and read, digest. Okay, what are they really saying? Before, I really do not. Annual reports are always bulky, so to go through all the details in the annual report is always scary for me. But now I can confidently go through the annual report of a company and digest it.
All right. Well, Alex, that was pretty amazing, huh?
was very good indeed. And it's not all for today, so we'll thank Rachel for now. Now you
Yep.
can relax and chill and share on your teammates or people who's going to present next. So
Yeah.
what we're going to do right now is switch the stream. So we're going to stop here and start a new stream. You can join us via LinkedIn and YouTube and also X and I think a few more platforms. You'll find us. Finally, I just want to say that the Valuation Masterclass helps you become a valuation expert in months rather than years. And you can learn more about the next bootcamp on our website, valuationmasterclass.com/bootcamp. So we hope to see you there and see you on the next stream.